You think money is the prize, but the first thing this world really takes from you is your name. At 11:47 p.m., the number glowing on your screen is $847 million, and none of it belongs to you. You are just the one who has to make it make sense before sunrise. Your coffee is cold. Your Bloomberg terminal hums like a machine that never sleeps. And somewhere inside slide 34, one wrong assumption can wreck the whole story. You still feel lucky to be here. That feeling will not last. You have been awake for 19 hours, and your brain is starting to split into pieces: comps, debt schedules, discount rates, sensitivity tables, email chains, comments in red. Your VP already said the DCF assumptions were too aggressive, so you rebuild the model from the ground up. You nudge the discount rate up by 50 basis points. The valuation drops hard. You flag the change, send the email, and stare at your inbox like it might tell you who you are. Morning comes. Nobody answers. That silence teaches you something. You are not here to be seen. You are here to produce. Decks, models, memos, outputs. That is your job now. You do not join client calls. You do not speak in meetings that matter. You sit on the 31st floor of a glass tower in Midtown Manhattan, staring through windows you never have time to enjoy, telling yourself this is just the foundation. Everyone starts here, you say. Everyone pays dues. But every week, the cost gets clearer: sleep, relationships, weekends, pieces of your 20s you will never get back. Still, there is something electric about being this close to the machine. Somewhere above you in the same building, people are making $4 million a year, and you can feel that fact in your body. You start to understand that wealth at this level is not random luck. It is access. It is trust. It is proximity to decisions that change markets before the rest of the world even knows a decision was made. So you keep going, one model at a time, one miserable night at a time. Then the title changes and you get your first small win. You get promoted. And for 1 second, it feels like your whole life just opened up. Your base jumps to 150. Bonus takes you to 250. You start breathing a little deeper, ordering nicer dinners, maybe even convincing yourself this is finally becoming worth it. But the hours do not change. The pressure does not change. The only real difference is that now you are close enough to hear important people talk. And once you hear how they talk, you realize numbers were never the whole game. That is when level 2 begins. You are on client calls now, but you barely speak. You listen, take notes, and try not to miss anything. One morning, the CFO of a $6 billion company asks about restructuring debt, and your VP calmly walks him through a high-yield bond issuance like he is explaining the weather. You know the terms are brutal. You know the cost of that debt will haunt them later. But nobody in the room talks about pain. They talk about timing, flexibility, market appetite. You sit there quietly and feel a new rule locking into place. Deals are not really about spreadsheets. Spreadsheets just make the story look clean. The real deal is relationships, leverage, timing, and knowing exactly when someone has no better option. Your VP controls all three. You control the model. That difference starts eating at you. Then you notice something else. The deal flow at this bank is not random either. It comes from trust built years earlier. Maybe on a trading floor, maybe over private dinners, maybe in rooms you will not see for another decade. You are still outside that circle, but now you know it exists. That knowledge changes the way you walk through the office. You start watching who gets returned calls on the first ring and who waits 3 days for an email. You notice which names make people stand up straighter. You realize reputation here acts like currency long before cash ever shows up. And then you get your first taste of what closing something actually feels like. A $340 million debt refinancing gets over the line, and you helped make it happen. The press release goes out. Your managing director's name is on it. Yours is nowhere. What you get instead is a handshake and a $15,000 spot bonus. That is it. No applause, no speech, no moment where the room finally sees you. You tell yourself this is normal, and it is. But as you watch your inbox fill up with new asks before the old adrenaline even fades, you understand the real reward was never recognition. The reward is being trusted with the next thing. That is how they keep you moving. You are 31 before you know it, and this time the promotion comes with a corner desk and 2 analysts of your own. The strange part is you know exactly what their nights look like, because not long ago they were yours. Only now you are not supporting deals anymore. You are running them. You own middle market mandates, recapitalizations, sell-side processes. You draft engagement letters, negotiate fees, and hear your own voice sounding calmer than you feel. For the first time, your name is actually on something that matters. It should feel like a rival. Instead, it feels like the door just opened onto a much darker floor. Okay, you start to understand what leverage actually feels like. And it is not loud or dramatic the way you imagined. It is quiet. controlled, almost invisible. You fly to Houston for a meeting, then Dubai, then Singapore, moving through airports like a ghost with a passport. Expensive dinners blur together, but the real conversations never happen at the table. They happen before or after, in smaller rooms, with fewer people, where nothing is written down and everything is understood. That is where deals are decided. Your fee on a $600 million transaction is roughly $6 million. And for a moment you let that number sit in your mind. Then you remember none of it is yours. It flows into the division's P&L like everything else. You are still building, still climbing, still one layer below the people who actually own outcomes. But something inside you shifts. You are no longer just executing instructions. You are shaping them. And that power feels different, more addictive than money. This is the year you make your first real compromise. Nothing illegal, nothing that would ever show up in a headline. Just a quiet decision in a gray zone. You know the acquisition is overpriced. You know the projections are stretched. But the client wants the deal, your bank wants the fee, and everyone around you is moving forward like it is already done. So you say nothing. You let it happen. The deal closes. The bank collects $12 million, and you feel something new settle in your chest. 6 months later, the acquisition underperforms exactly the way you thought it would. The numbers come in weak. The narrative starts to shift. But you do not feel guilty. That surprises you. What you feel instead is clarity. You finally understand the rules. This world does not reward being right. It rewards being aligned with power at the right time. And once you see that clearly, it becomes harder to go back to who you were before. That version of you starts to disappear. The title on your door changes again, Managing Director. It lands heavier than you expected. You stop modeling entirely. You stop thinking in rows and columns. Now you think in people. You call CEOs directly. You build calendars full of private conversation, board meetings, late dinners that stretch into negotiations without ever being called that. When a CFO picks up your call on a Sunday morning, you understand what this title really means? It means access. And access changes everything. You structure a $8 billion leveraged buyout and close it in 90 days. The speed alone would have terrified you a few years ago. Now it feels normal. You collect 2% in fees before the ink even dries, and then you move on immediately, because that is what everyone at this level does. No celebration, no pause, just momentum. You begin protecting two relationships above all others. Not friendships, not loyalty, something colder. Strategic alignments that look like trust from the outside. You know what they are, and they know what they are. Nobody says it out loud. You are now close enough to the flow of information that your instincts start to feel different, sharper, faster. Not because you are smarter than everyone else, but because you are positioned earlier than they are. It is not illegal. It is not even hidden. It is just asymmetric. And somewhere along the way, you stopped apologizing for benefiting from that asymmetry. You sleep about 6 hours a night now, which feels like a luxury compared to before. You see your family on weekends, unless a deal is closing, which happens more often than you admit. You have not felt nervous about a transaction in years. That absence of fear should feel like confidence. But sometimes in quieter moments, you wonder if it is something else entirely. Something closer to numbness. You do not sit with that thought for long. You never do. You learn another pattern you always leave before the real problems begin. Before the debt covenants tighten. Before the integration cracks show. Before the consequences fully arrive. By the time the story turns, you are already working on something new. That habit becomes instinct. And then one day, almost without ceremony, you step out of the bank entirely. Not because you failed, because you outgrew the role. Or at least that is what you tell yourself. You join a private equity firm managing $12 billion in assets. And for the first time, you stop thinking about salary altogether. Now you think about carry. If the fund performs, your share could be worth somewhere between $40 and $90 million. Not guaranteed, not liquid, but real enough to change how you see the future. You are no longer advising on capital. You are deploying it. And the moment you realize what that truly means, everything shifts again. Okay, you stop standing on the sidelines. Now you step into ownership. You take control positions in companies you barely knew existed a year ago. You sit on 6 boards. Your portfolio companies employ over 14, 0 people combined. And the strange part is you have never met most of them. They exist in reports, dashboards, quarterly summaries. Numbers, not faces. You tell yourself this is scale. This is efficiency. But somewhere deep down, you feel the distance growing. You run a $2, $1 billion acquisition of a healthcare services platform leveraged at 65%. The structure is clean, elegant, almost surgical. The management team absorbs most of the operational downside. The fund captures the upside. It is completely legal, completely standard. You present it like a strategy, not a gamble. Everyone nods, everyone agrees. And in that moment, you realize how easy it is to design outcomes when you are not the one who has to live inside them. 18 months later, the company cuts 800 jobs. You are not the one who delivers the news. The CEO does. You are on the board call using words like right-sizing and operational efficiency. Language becomes insulation at this level. It protects you from the human cost of your decisions. You notice how quickly everyone adapts to that language, how natural it starts to feel, and how dangerous that comfort might be if you ever stop to think about it. Your fund raises its next vehicle $17, $5 billion. Oversubscribed. Demand exceeds supply, which means your leverage just expanded again. Your investors include sovereign wealth funds, pension systems, family offices you will never meet. Their money flows through you into decisions that ripple outward across industries. Individual deals start to feel small. Tactical. You begin thinking in systems instead of transactions. And once you see the system clearly, you cannot unsee it. You are no longer just an operator. You are becoming an allocator of outcomes. Entire sectors shift based on where capital moves. And you are one of the people deciding that direction. That realization should feel powerful. It does. But it also feels heavier than you expected. Because now every decision echoes further than you can track. You start to wonder where the line is between influence and control, and whether that line even matters anymore. Your strategy expands beyond companies into markets themselves. You move into a fund that trades currencies, sovereign debt derivatives. The scale changes again. You are long the dollar, short the Turkish lira, long Japanese government bonds. You have been building a volatility position on Japan quietly for 8 months. No announcements, no signals, just conviction shaped by patterns most people never notice. And then the moment arrives. The Bank of Japan adjusts its yield curve control policy, and in a single week, your fund makes $380 million. You stare at the number, waiting to feel something. Excitement, relief, pride. But nothing comes. The trade was correct. The thesis played out. The system responded exactly the way you expected. And that is the problem. It feels less like a victory and more like confirmation that you are operating on a different layer now. You move on immediately. That is the rule at this level. No dwelling, no celebrating, no attachment. Just the next position. Somewhere along the way, your fund faces a regulatory investigation. It ends with nothing found. Clean. Closed. But the process teaches you something more valuable than any trade ever could. Regulators look backward. They analyze what already happened. You, on the other hand, spend your time trying to see what is about to happen. That difference changes how you think. You are no longer reacting to markets. You are positioning ahead of them. And the more you do that, the more your world starts to separate from everyone else's. You gain access to people you never expected to meet. Not because you chased it, but because your capital connects you to them. A former Treasury official joins your advisory board. You pay him to frame your macro views as policy aligned. It is all perfectly acceptable. You notice something else quietly slipping away. You have not spoken to your college roommate in 4 years. Nothing dramatic happened. No falling out. No conflict. You just kept moving forward, and he did not move in the same direction. He earns $90,000 a year as a civil engineer. You try to imagine explaining your world to him, and you realize you do not even know where to start. That realization should bother you more than it does, but it doesn't. Okay, you file that feeling away like everything else. You have not lost anything you can clearly name, and that is what makes it so hard to measure. Your life still looks intact from the outside, but internally something has been exchanged. You just cannot point to the exact moment it happened. Instead, your world expands again. You are invited onto the board of a $90 billion sovereign wealth fund, and suddenly, the scale of your decisions changes beyond anything you imagined. You are no longer executing trades. You are setting allocation mandates. Entire markets receive or lose capital based on frameworks you help define. When your fund moves, secondary effects ripple across currencies, equities, and debt markets before most people even read the press release. In fact, you start to realize something unsettling. You are not reacting to the news anymore. You are becoming part of what creates it, and that changes how you see every headline. You have direct lines to finance ministers and central bank governors, not as a lobbyist, as a peer. That shift is subtle but profound. Conversations that once felt distant now happen over private calls and controlled meetings. You help restructure $14.7 billion in emerging market debt over 18 months quietly alongside 2 other funds. No public narrative captures the full picture. No single observer sees all the moving parts. But you do, and that perspective is isolating. When a sovereign signals distress, you are already positioned before the downgrade hits. Not because someone told you, but because you understand the structure deeply enough to read the signals before they are announced. It is not insider trading. It is something harder to define. Pattern recognition at a level that feels almost predictive. And once you operate there long enough, the rest of the market begins to feel slower. Your daily life reflects that separation. You have not used a public ATM in years. When you travel, there is a security detail. Your schedule is controlled, filtered, optimized. You do not attend panels. You do not give interviews. You communicate through structured channels, private dinners in Geneva, Singapore, Riyadh. Nothing is recorded. Nothing is written afterward. And the more invisible you become, the more influence you seem to gain. Your name appears on a global list, once something like Forbes. Recognition that once would have meant everything now feels like a liability. You quietly request through an intermediary not to be included again. Privacy becomes more valuable than attention. Trust becomes more valuable than exposure. Freedom becomes something you define differently now. And somewhere in that shift, you realize you are no longer building a career. You are maintaining a position. There is no title that fully describes what you are anymore. Your name sits inside a trust. That trust owns a holding company. That company holds positions across 17 financial institutions in 9 jurisdictions. Some of it is public. Most of it is structured through offshore vehicles that almost nobody traces back to you. On paper, you are a private individual. In reality, your reach extends further than anything your younger self could have imagined. You have not executed a trade personally in over a decade. You make decisions. 6 other people execute them, all of them bound by agreements that would survive serious legal pressure. They do not discuss your role. They do not explain the structure. Everything operates quietly, efficiently, without friction. And the strangest part is how normal this all starts to feel after enough time passes. A central bank in Southeast Asia prepares to adjust interest rates, and you already know it weeks in advance. Not because of a leak, not because of a tip, but because you understand the system well enough to anticipate its next move before it speaks. That ability changes how you experience uncertainty. The world feels less random, more mechanical. And that realization is both empowering and deeply unsettling. Your carry across active funds sits at roughly $2, $4 billion in unrealized value. Numbers like that stop feeling real after a while. They become abstract, like coordinates on a map you rarely look at directly. You have a family. You care about them. You try to show up when you can, but your time is no longer your own. It belongs to something larger, something constantly moving. And you are starting to wonder what happens if you ever try to step away. Okay, you have a house by the water now. Quiet? Perfect. The kind of place people imagine when they think of success. You sit there sometimes, looking out at something that should feel like peace, but your mind does not slow down. It scans, it models, it positions. You try to remember what it felt like to just exist without calculating the next move. That version of you feels distant, almost fictional. And the silence around you starts to feel heavier than the noise you left behind. You love your family in a way that feels real but different. Measured, structured. You show up on holiday. You make time when there is space. You try to be present. But even in those moments, part of you is elsewhere, tracking markets, thinking in probabilities, reading signals that never fully turn off. You start to question something you never questioned before, whether you chose this life, or whether it slowly chose you. You are not happy. But you are not unhappy either. Those categories stopped making sense somewhere around level 5. What replaced them is something colder. Orientation. A constant awareness of the environment. A permanent positioning of capital against risk. A mindset that never rests because it cannot. You do not chase outcomes anymore. You anticipate them. And once you live like that long enough, emotions begin to feel inefficient. You notice you have stopped asking simple questions. What do you enjoy? What do you want? Those questions feel irrelevant now. Everything is framed in terms of optimization, allocation, timing. You are no longer reacting to life. You are managing exposure to it. And in doing so, you realize something uncomfortable. You have built a system so efficient that it no longer needs the person you used to be. You think about stopping sometimes, not quitting, just pausing, stepping outside the flow for a moment. But every time you get close to that thought, another deal, another signal, another opportunity pulls you back in. The machine does not slow down. It does not wait. And neither do you. Because if you stop moving, even briefly, you are not sure what would be left underneath everything you have built. Somewhere far below you, in the lobby of a glass tower in Midtown Manhattan, a 23-year-old walks in for his first day. He logs into his Bloomberg terminal, sits very still, and stares at the screen the same way you once did. He thinks this is about money. He feels the same excitement, the same nervous energy, the same belief that he is stepping into something extraordinary. And in a way he is, just not in the way he thinks. You watch people like him sometimes. Not directly, but through the structure you now understand so well. You can see the path ahead of him before he takes a single step. The long nights, the small wins, the compromises that do not feel like compromises at first. The slow shift from learning the system to becoming part of it. And you wonder, briefly, if anyone could have explained it to you back then in a way you would have understood. Because the truth is, nothing about this journey feels extreme when you are inside it. Each step makes sense when it happens. Each decision feels justified in the moment. It is only when you zoom out, when you trace the path from where you started to where you are now, that the full weight of it becomes visible. And by then, you are too far in to easily step back. You sit there, looking out over the water, running scenarios you do not even need to run anymore. And a quiet realization settles in. This was never really about the money. The money was just the entry point. The visible layer. What you were actually building piece by piece was access, influence, positioning inside a system that reshapes itself constantly and rewards those who understand its architecture. And the machine never stops. It does not care who runs it, only that someone does. People enter. People rise. People change. And eventually people become indistinguishable from the system itself. You thought you were climbing toward freedom. But what you were really doing was moving deeper into structure. And now, standing at the top, the most unsettling question is the one you can no longer ignore. If you walked away, would anything of you still remain?